Blackrock is increasingly becoming a big advisor to the FDIC. They brought on
All these financial institutions, they buy politicians. You can take this big sum of money, and then you can start to buy people.
BlackRock expects to ramp up the trading of the mortgage tools to 4 days a week.
BlackRock, it cut less than 3% of its nearly 20,000 strong workforce.
We have to force behaviors. At BlackRock, we are forcing behaviors.
The world's largest asset management company, with over 10 trillion US dollars in assets, it has more assets than the GDP of all countries in the world, except China and United States of America. This company controls most of the American banks and also controls most of the conventional media. BlackRock is worth half of America's total GDP. The government of China and United States turned to BlackRock to escape recessions. But what if I told you there is more to this story than what meets the eye? Everything started in 1952 when Larry Fink, the BlackRock founder, was born. Larry Douglas Fink was born on November 2nd, 1952. He grew up as one of 3 children in a Jewish family in Venice, California. His mother Lila was an English professor and his father Frederick owned a shoe store. He always hungered for power, and from an early age he discovered that the real power is not in politics but in money. He earned a BA in political science from UCLA in 1974. Fink is also a member of Kappa Beta Phi. He then received an MBA in real estate at the UCLA Anderson Graduate School of Management in 1976. Fink started his career in 1976 at First Boston, a New York-based investment bank, where he was one of the first mortgage-backed security traders and eventually managed the firm's bond department. At First Boston, Fink was a member of a management committee, a managing director, and co-head of a taxable fixed income division. He also started the financial futures and options department and headed the mortgage and real estate products group. Fink added, by some estimates, $1 billion US to First Boston's bottom line. He was successful at the bank until 1986, when his department lost $100 million due to his incorrect prediction about interest rates. The experience influenced his decision to start a company that would invest clients' money while also incorporating comprehensive risk management. In 1988, under the corporate umbrella of the Blackstone Group, Fink founded BlackRock and became its director and CEO. When BlackRock split from Blackstone in 1994, Fink retained his positions, which he continued to hold after BlackRock became more independent in 1998. His other positions at the company have included chairman of the board, chairman of the executive and leadership committees, chair of corporate council, and co-chair of the global client committee. BlackRock went public in 1999. BlackRock's strategies involve a mix of index tracking funds and active management, allowing it to diversify investments across various sectors and markets. BlackRock's size and reach have led to its involvement in shaping global financial markets, industries, and policies. It's often referred to as a shadow bank, as its influence can rival that of central banks. With 70 offices in 30 countries, BlackRock is a truly global firm that can combine the benefits of worldwide reach with local service and relationships. They manage assets for clients in North and South America, Europe, Asia, Australia, the Middle East, and Africa. BlackRock manages several $1 trillion net worth of assets, approximately 10% of all financial assets worldwide. BlackRock buys and holds stocks and bonds, advises financial ministries, central banks, pension funds, state funds, and insurance companies. They also control significant shares in corporations around the globe, whether it's mining for iron in South America or gold mining in Africa. But they couldn't do all this without the help of a software called Aladdin. With many ups and downs in the financial sector, Blackrock created Aladdin. It's a powerful software network of 5,000 computers that helps to perform risk analysis for Blackrock's clients. It receives sensitive data from important institutions and uses it to make the high-stakes risk analysis. Companies pay a lot of money for Aladdin. Its job is to monitor millions of trades and analyze their clients' portfolios 24/7, showing them precisely what can go wrong, providing incredible levels of risk analysis. It gives also to BlackRock access to sensitive data from important institutions like banks, pension funds, and insurance companies from around the world. With all this data, BlackRock has placed itself at the top of the world economy, dominating sectors such as oil and gas, energy, transportation, and food. BlackRock engages with CEOs and policymakers worldwide, advocating for environmental, social, and governance (ESG) factors in investment decisions. Some hail this as responsible capitalism, while critics argue it's a form of corporativism. However, BlackRock's influence isn't without controversy.
Environmental regulation.
Critics raise concerns about potential conflicts of interest, lack of transparency, and its impact on market monopolization. Calls for stricter regulations have emerged to address these concerns. Some argue that enhanced oversight is necessary to prevent any undue influence on financial system. The future landscape. As we move into the future, technology continues to reshape finance. From its modest beginnings to its current global prominence, BlackRock's journey reflects the interconnectedness of finance, power, and society. As the world changes, so too will the dynamics of influence.